Hello value investors, thank you for joining me. Today I want to talk about Palantir and why I believe that Palantir is undervalued. I'm going to talk about the number of shares outstanding, I'm going to talk about its revenue growth rates, and I'm going to talk about its profitability, and finally I'm going to compare it with a peer. So Palantir's fully diluted number of shares outstanding reaches approximately 2.5 billion. So this is including warrants and all kinds of stock options. So its market cap that you may see listed at the moment is not really representative of what the company is being valued at. The company's approximate market cap at the time of recording is close to close to 25 billion if we take approximately $10 per share, which it is at the moment at time of writing. So in some of the recent raises, I noted in here that some of the recent raises have been at 11 or $11.50. So the market cap, the share price right now is less than recent raises in private listings. So one of the things that basically the thing that I'm quite attracted to in the case of Palantir is that it not only is reporting strong growth rates, you can see here that its guidance for Q3 and Q4 in the ballpark of the low to mid 40% ranges. So it's growing at a strong rate, but it also says that looking out to 2021, it's expecting greater than 30% revenue growth rates. So I've just assumed that greater than to mean approximately 35% year-over-year growth rates. So you got a company that's growing quite strongly, but it also surprisingly is also eyeing up some non-GAAP operating profit margins of 11% for the end of this year. So you got a company that's growing at approximately 40% in the ballpark of 11% operating profit margins. So on the rule of 40, it's hitting approximately 53%. So you got a very strong SaaS business here, which has contracts of approximately 5 years. So you have a very compelling long visibility company, and I believe that this justifies trading for a higher multiple than it presently does. So I've gone through in the article and I've compared Splunk with Palantir, and you can see that Splunk, I know that Splunk is going through that kind of transition here, so it's not really apples to apples comparison. But Splunk, even if you say that looking out to next year, once they've started lapping the way that they record their revenue away from those perpetual licenses towards recurring revenues, even if you take that in mind, Splunk is still non-GAAP unprofitable. So however you measure up, Splunk should trade at a lower multiple to Palantir. But so if you look out to its 21 revenue guidance, it trades for approximately 17 times revenues, whereas Splunk trades for 11 times. So Splunk does trade at a discount, but 17 times revenue guidance for 2021 is not an exuberant multiple to have this amount of visibility on a company that is already eyeing up non-GAAP profits. This is a very strong executive team with Peter Thiel and Alex Karp. So I think that there's ample justification for it to trade at a larger multiple than something like Splunk. What's more, Splunk is already trading for 31 billion market cap. So in the case of Palantir, it actually trades at a discount to a company like Splunk that is growing slower with less operating profits. So with that aside, I hope that you've enjoyed this video. Don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced arguments for the stocks I own. Thank you for listening. I'll see you soon.